Hello everyone, this is Indra Lau from Elliottwave-forecast.com. In this video, I'm going to take a look at the Euro commodity cross. These are the two pairs that is not part of the 42 instrument that EWF currently covers, but I've been tracking these two pairs, which is the Euro New Zealand dollars and the Euro Canadian dollars. Now if you'd like to get more updates on the 4 hours, usually I update the 4-hour charts in my Twitter handle, but here just want to briefly talk about a possibility that these two pairs, the Euro New Zealand dollars and the Euro Canadian dollars, they could form some kind of pretty important high sometimes soon, okay? And I would explain why, and then we're gonna take a look at some of the structures here. So this is the weekly chart of the Euro New Zealand dollars, all right? So from the high here, this one, before I go over this chart here only goes as far back as 1998, all right? So so let's go over to the other chart, which is even a longer term chart. Now this is the Euro New Zealand dollar chart going as far back as 1960s, all right? Now the euro as a currency is only introduced in 1999. But before 1999, they have something called the European Currency Unit, which is basically not a real currency, but it's a weighted, currency basis. It's a basket of many European currencies, and the Deutschmark, German Deutschmark, has the biggest composition on that ECU, which is the European Currency Unit. And then in 1999, the ECU was replaced by the euro. Okay, so in fact, some of the brokers have charts as far back as before 1999, and they would use the ECU or the German Deutschmark to extrapolate the data here, because this is the Euro New Zealand dollars. But if the euro only starts in 1999, then what about all this data here before 1999? And that would be extrapolated, okay, from the ECU or from the Deutschmark, because the Deutschmark is also a pretty good currency to be used for the extrapolation, because it has the biggest weight in the ECU, which is around 35%, I believe. So this one, as you can see, it goes far as as far back as 1970s. This chart here, and if I label this the all-time high here as with W in the grand supercycle, which is the largest degree in Elliottwave, okay, in the grand supercycle degree. So if this is with W, we can see here it's actually correcting in 3 swings, right? W, X, Y, right? And we can see here that actually it's already reaching the equal leg. So this in itself is already a cause for warning that this could complete already in the correction, right? And then this may actually bounce to correct the entire decline. So if that's the case, then it will have a sizable bounce, right? So it could go back to 2.0 if that is the case. However, if we look at the internals, which is this last leg here, okay, this last leg here doesn't look very pretty. Doesn't really look very pretty, right? Now this one right here, if you calculate the 50% of this from this number, all right, the 50% is around 1 actually, if you subtract and then divide by 2. So it also has not reached the 50 back of the entire rally basically, okay. But anyway, this structure right here, the internals, this doesn't really look complete yet in my opinion, okay. And then so I would argue that even though this already reached equal leg, that there's a possibility that it can actually make a new low, because the internal structure here doesn't look complete. And also, if you look at the Euro cross, that we're gonna take a look later, the Euro cat, which has a better structure, it also looks incomplete. All right, so this is the the real long-term overview of the Euro New Zealand dollars. It's already at the equal, okay. However, the internals here doesn't look complete yet. So let's go back to our previous chart in the e-signal, okay. So this is the Euro New Zealand dollars on the weekly chart. It starts from the X in blue, okay. So if we go back here at the very long-term chart, the X in blue is this one. So, okay, so we start with this, all right, in e-signal, and then we are labeling all these internals legs here in the e-signal, okay. So starting from the X in blue, what we have here is it's a WXY structure, okay. So this one is the W and the X, and then the equal of this W and X in red is at 1.10, okay, and it hasn't been reached. All right, so this one is basically a simple WXY like this, right, and this would be your W right here, and then this is your X, right, and then this one has not the equal. This one would be equal to this one when it reaches the 1.1, and then all in between, this one is just the internals. So the internals of the W in red is in triple WXYXZ, and then the internals of this Y in red, the leg of the Y in red, is very complicated. As you can see, the internals here is actually in double, okay, double structure. So this is simply is a double like this, okay, and this one would be your W right here, okay, and this one would be your X. So this one would be your fifth swing, okay. So this one is supposed to be 1 2 3 4 5 6 7. So this one is your fifth swing here, and this one is your sixth swing, and then we are now looking for the seventh swing to complete this WXY structure, okay. And this W here is further subdivided into another WXY in blue. So that is basically the structure of this in this pair in the weekly time frame. All right, so now this one, unless it denies the last leg to the equal leg right here, which means that X is complete here, and if that is the case, then we wouldn't have this last leg lower here, and that if we look at this chart here, then this would mean that X in black is already complete here. Then it should, using the Elliottwave hedging idea, it should correct in very big 3 waves, okay, to correct the entire decline, and can go back to 2.0 if that's the case, right? But I would argue that because this structure doesn't look complete, has not reached equal leg, there's a possibility that it can turn into this equal leg area, which is the 1.1. all right. Now if you look at this weekly chart, we can see here it is trying to complete this X in black, which is the sixth swing of this WXY structure, okay, and then this one is supposed to be around 50 of this, right, 50 of this. So if we measure this, then we are looking for this target area around 1.67 and 1.74 to complete with X in black, and then from there it has a chance to turn into a new low towards the 1.1. So this is a really big drop right here, and if that happens, that is 6,000 pips or 5,000 pips, something like that, right? But this is a weekly chart, so this is a very long-term move. So you shouldn't expect to have something like this in a week or in a month. This would be a multi-month decline, maybe taking a year or 2 years to finally conclude the X in black. All right, so that is the weekly overview for the Euro New Zealand dollars. Now if we take a look at the daily chart starts with the W in black here, okay, So if we look at the daily chart of the W in black, now we can see that it rallies. Okay, it rallies pretty strongly. As you can see in the weekly, it rallies pretty strongly, and we can count this is also in our WXY structure, right? So we have the W in X, and then the equal would be around this area, around 1.64 all the way to 1.68. Okay, 1.68, which is about the same area as this one. It starts from the 1.67 at 50 back all the way to 1.74. okay, so this should be a potential area for the width X in black to complete. Okay, unless it is doing a triple, which means that it can get to a Y in blue and another X in blue and another rally, and that would make the pair to go to 1.74. But if it is not a triple, then this area right here around 1.67, which is also in the 50 back, can potentially end the width X in black. Alright, and then from there, with Elliottwave hedging, then you should expect at least a 3 waves pullback, and if it is not triple, then at least should correct this entire rally right here towards a 50. Okay, and with the possibility that actually it will continue to a new low towards the 1.1. Okay, so Euro cross is really at a very interesting spot soon. Okay, and we're gonna see what the pair is going to do from this area, whether it can really go to the equal leg or not. Now if we look at the EuroCAD, is actually more is clearer. Okay, the structure looks nicer than the Euro New Zealand dollars. Now if we look at the EuroCAD in the weekly chart, we can see here that from the W in black we have WX, right, and then Y. Now the Y here has not reached equal leg, which is at 0.948. okay, and this one looks nicer and looks more clear. If you look at the very long-term chart of the EuroCAD, this is the very long-term chart of the EuroCAD. All right, back all the way back to 1960s, we can see here this looks like a flat ABC. Okay, and the C is in 5. Okay, and that will complete W in black in the grand supercycle degree, which is the largest degree in Elliottwave. All right, and then from there we can see it it drops. The first one is WX, and then it has already made a new low below this. So this is a very clean structure. If this will go to the equal leg, then it looks like it is going to retest the low right here. If you can see, this leg here would be equal to this around this. So it looks like it's going to go to the equal leg, which is retesting this low right here. Now if we go back to our chart earlier, over here we start from the W in black, and W in black is this one in the super long-term chart here. So from the W in black we have W and X in blue, right? And from W in black we have W and X in blue. So this is the legs, and then if we measure this, then our target here, so that the WXY structure is complete, is at 0.948. Alright, so this is the weekly chart of the EuroCAD, and now we are bouncing right here on the fifth swing, right? So this 1, 2, 3, 4, 5. The sixth swing is in a flat, right? Now we are now looking to complete the seventh swing. Now this decline right here from here is complete with the width W, right? And then now it's bouncing in width X, which is supposed to be complete around this area, 1.43, 1.46, which is the 50 back of this. And then from there, as far as this level holds, we have a chance to actually go to a new low right here to continue the seventh swing. Okay. Now, unless the X here again is denied, unless the equal leg is denied and X is complete here at the 61.8, okay, which is possible, but most of the time the structure will look to complete this sequence. Okay, 85% of the time the structure should be looking to complete the sequence. Then again we have a chance, just like the Euro New Zealand dollars, that we can be looking for a new low. And this is also a huge drop here from 1.43 all the way to 1, which is 4,000 pips. it looks fantastic right now, but you know, that's what the structure is telling us for the time being. All right, so now we are also very close to this area right here. If you look at the daily chart of the EuroCAD, we can see from the W in blue, which is this W in blue, you see in the weekly chart earlier, we have a rally, right? We have a rally to complete the X in blue bounce. Now, if we look at the internal structure of the X in blue bounce in the daily chart, we can see here from W in blue, we have W and X, and then we are looking now for this last push, so that if we measure the equal of the W and X in red, okay, what we got is this area here, 1.42 to 1.44, which has a confluence with the 50 peg right here. So this is indeed the area we are looking for the wave X in blue to complete, and then from there we have a chance for the pair to actually turn lower to continue this, you know, the 7 swing right here. Okay, so if anybody, so don't get too bullish, as you know, today with the euro cross, especially in the euro commodities, because it is approaching a very interesting area right here where we can, you know, we can get a reaction, at least a 3 waves pullback to correct this, you know, to correct this entire rally of at minimum. Okay, or in the structure, the pair can actually continue again the move lower in the 7 swing in the weekly time frame. So in the weekly time frame, the pair is actually bearish, all right, the weekly time frame, whereas in the daily it is still bullish. As far as this levels intact, we will be looking for the pair to complete this sequence towards this area. Okay, but the weekly chart is telling that the euro cross, the euro commodity, can be looking to turn lower into the equal leg. Alright guys, so between the two, the euro CAD and the euro New Zealand dollars, if we look at the New Zealand dollar CAD, now the New Zealand dollar CAD right here is looking for possibility of another you know, move lower sometimes in the future. So this means that CAD will be stronger than the New Zealand dollar somewhere in the future, right? Even though in the meantime we are looking for a bounce in the New Zealand dollar CAD, all right, but over the course of months ahead, we can have another leg lower in the New Zealand dollar CAD, which means CAD would be stronger than New Zealand dollars. So if we were to choose between the euro New Zealand dollars and the euro CAD, probably the euro CAD is a better choice because CAD will be stronger than the New Zealand dollars. So in the euro CAD here, if anybody is, you know, looking to fade this bounce right here, probably is a better choice, okay, than the euro New Zealand dollars right here. Alright guys, so thank you for watching. If you enjoy our analysis, as always, we have a 14 days trial. Feel free to check us out. We have you know, we cover 42 instruments from forex, commodities, and also index, and try us and see if we can help you with, you know, our analysis. Thanks for watching, and I'll see you next time.